Wayne, thank you for being here.
It's a pleasure. Thank you for having me.
Of course. I've been very excited for this conversation. So I feel like there's a lot of very interesting topics that we can discuss today. But before we get to that, please introduce yourself.
Sure. So my name is Wayne Farmer. I'm president of the Canada ASEAN Business Council as a volunteer role, which is a group that was set up about a decade ago to help promote commercial trade ties between Canada and the 10 Southeast Asian nations that make up ASEAN. Besides that, I work in private investments into private companies in the Asia region and some cross-border back to North America. I live in Singapore. I've been there for about 20 years now, and Hong Kong before that for a number of years. Canadian, originally from Ottawa, Queens, and IB grad. And I have one daughter who you met earlier on the video call, and my wife is also Canadian, originally from Hong Kong. Is a very senior banker in asset management as well, based in Singapore.
Amazing. It sounds like you have a lot of very fun and interesting projects on the go with the various businesses that you mentioned. But let's start with the Canada ASEAN Business Council. Mm-hmm. Can you tell us a bit more about that? Like, I understand it's to help establish ties to the Asian region, but like, what do you guys do with that council? What are some of the policies that you try to enable? Sure.
So we have over 80 members, mostly medium to large size corporations, although there's a number of SMEs. We have a broader reach of about 14,000 contacts and that get our media, come to our events. We were set up to represent the Canadian private sector and in Canada's thrust into ASEAN. And we are now, after recently become accredited by the ASEAN Secretariat as an ASEAN accredited organization, so a partner with ASEAN, which was quite an achievement because only the US ASEAN and EU ASEAN Business Councils, amongst all the private sector groups that interact with the ASEAN Secretariat, have been accredited. So we're truly been recognized as a partner, which is great not just for us, but for Canada's approach and relationship with that region. There are two free trade agreements under discussion, one with ASEAN as a whole that would encompass all 10 of the countries, and a bilateral with Indonesia. And those are examples of things that we were advocating for many years. And we assist, now that they're officially under negotiations, our trade negotiating team based in Ottawa and the various trade negotiating teams from the member states, we still stay in touch and support with feedback, communications, and certainly what industry is looking to get out of those FTAs. We host a number of events in Canada and Southeast Asia, about 40 to 50 or more a year, to raise awareness of the opportunities out there. This trip, for example, was quite a long one that I've been on. We were in Vancouver, Calgary, Saskatoon, Regina, Montreal, Ottawa, and Toronto, meeting with various senior officials, some of the provincial trade ministers. We had a number of roundtables. We did a panel at the Calgary Energy Show, for example, and again, raising awareness, talking about opportunities in ASEAN. We have 2 full-time staff in Singapore, one in Jakarta, one in Bangkok, and one person in Montreal, which is our main office in Canada. We have a satellite office here in Toronto and also in Calgary. So that's the kind of highlights, you could say, of the organization. We have a very prestigious set of chairs here in Canada. Brad Wall, who was former Premier of Saskatchewan, Louis Vachon, who's just recently retired as CEO of National Bank of Canada, Jean Charest, who you probably know of, and Janet De Silva, who just retired from Toronto Regional Board of Trade recently as well, who helped me and the council kind of move things along.
Oh, that sounds amazing, and clearly a very established and fairly large organization. And I feel that the fact that you're able to help I suppose, inform policy and perhaps influence in certain aspects is great for the private sector and for businesses overall in Canada. Because, of course, having free trade agreements with regions like Asia, which are very sort of on, I wouldn't say on the up and up anymore, like they've become quite established. And so having stronger ties with them is definitely important for us. So that's amazing. Now, you mentioned that you were in Canada and then you went off and you're currently in Singapore. I suppose what prompted you to go to Singapore or to Hong Kong where you initially went?
Sure. So I worked, so I'll be dating my age here on this podcast, but I worked for the government of Prime Minister Mulroney and then Prime Minister Campbell. And then we lost an election rather dramatically. So I was fired by the people of Canada, essentially, and I moved to Hong Kong shortly thereafter. But Canada and Hong Kong have a lot of ties, as you probably know, both people and commercial. And so I moved to Hong Kong in '94, worked for the Thomson Corporation, a big Canadian media group in their financial media businesses. Ended up doing MBA with Ivy Business School that opened a campus there. Then went into direct investment, private equity type of work from there. Had a little sojourn to living in Singapore and Ho Chi Minh City, and then but then back to Hong Kong for a long stretch, and then eventually we moved down to Singapore, as we mentioned earlier.
So you left. You decided to leave government in Canada, I suppose because there was a different direction in policies, perhaps. You decide, okay, I'm going to go to Hong Kong now.
Yeah. And
you go off to Hong Kong. What did you do in Hong Kong once you got there?
Well, I left government because the government changed. So I was political staff. So our jobs were no longer there. But as I mentioned, when I got to Hong Kong, I had a few friends who had graduated from Queen's ahead of me that were working there. And they had a room for me to kind of move into and to start looking around for work. And that's when I took a job with Thomson. So we were selling financial data products, a lot around credit risk, credit analysis, mostly on commercial banks, which was a fascinating journey because initially this data set came in very large books, which went to CDs, which went to proprietary systems, which went online, right? So the initial part of that business, being in the media business and professional data, was quite interesting, and how technology impacted that over time. And then I was doing some M&A work for. Later on, I'd left and joined Pearson Group, another publishing company that publishes the Financial Times, and I was doing some M&A work for them, looking at local data, data sets, little companies that aggregated data within the region. And then I decided to go off on my own after I finished my MBA.
Wow, so credit analysis in the late 90s, early 2000s.
Mm-hmm.
I mean, we all know what happened in North America with the tech bubble. What was it like in Asia?
Well, Asia suffered through, shortly after the handover in Hong Kong in 1997, there was the Asia financial crisis, which was pretty dramatic. Hardly felt here in North America, but very dramatic in Asia, where you had significant currency depreciation, economic meltdown. The International Monetary Fund had to come in and help a couple of countries. Indonesia notably stands out. So it was a tremendous stressful time for many people in the region. And it took a while for that to work out of the system. I'd say the end of that crisis was actually a second crisis, which was SARS, if you remember, a precursor to our COVID experience, really affected Hong Kong in particular, Singapore, Toronto. But after 2004, I would say that economic turmoil kind of finished. And from 2004 up until now, up until COVID, I guess, it's been pretty much a one-way direction of growth within the ASEAN region. So it was a bit of a roller coaster, you could say, during that period, 97 to 2003.
Wow, that's fascinating. Now, I've spoken about COVID here several times, and I feel everyone's fairly familiar with the story in North America and COVID. Well, can you tell us a bit about what COVID was like in Asia? We've seen headlines, but what was it actually like? How much of that is legitimate?
Well, I guess it varies from country to country and how they managed it. So we were in Singapore, obviously. In fact, I didn't leave Singapore for almost 2.5 years, which who would have thought that would have been the case. And it was interesting from a personal experience having a regular schedule, because prior to that, there was a tremendous amount of travel, both myself and my wife. But I could say that I think the Singapore government managed things pretty well. Schools were kept open except for maybe the first couple of months. Most individual activities were kept open. And then there was a gradual sort of release of conditions that were put in over time, to the point at one point the Singapore government said, "Look, we need to get back to business," and travel the country was reopened. People were told to go back to work in their offices. So the small business and that relies on people being downtown in their offices was able to come back. They managed things a little bit differently. They subsidized some of the wages of people, much like they did in North America. However, they subsidized the companies that employed people. So you weren't getting a direct check from the government as an employee. You had to remain tied to your company. So it was much easier for companies to call their staff back when they wanted to. It was a bit of a mixed blessing, I think, in terms of experience. Less mixed on the family front, but business was kind of treading water for a couple of years. Certainly, it's hard to do things like fundraising for if you're a private equity fund, or sort of closing an investment if there's a requirement for physical inspections and that sort of thing. But so there was a little bit of a slowdown or treading water, I would say. But that's clearly has shifted, and economic growth within most of the ASEAN countries is back to 5-6%, and more developed country like Singapore, obviously less, but it's a pretty busy time. I think within 8 months of reopening the airport, arrivals into Singapore were close to pre-COVID levels, and now they've surpassed it in terms of the traffic at the airports and whatnot. So business has come back with a vengeance, I'd say.
Yeah, Singapore definitely bounced back, and I feel that's been the case with most of Asia. And where in North America, there still seems to be a bit of a resistance to some of the old COVIDian, I suppose, mindsets and narratives. Like, what do you view as like the difference that allows Asia to bounce back so much more quickly than, let's say, Canada or the U.S.?
Well, it's probably to some degree cultural, in that there is perhaps a broader sense of community in many ways, which is frayed a little bit, I think, in North America, being very individualistic, of course. I think perhaps a bit more respect for government too, which again is an issue we have these days in North America. I don't have the magic answer to that question, but I would agree that the way people have responded to go back to work, there's certainly some changes to how people want to work, but not to the same dramatic effect as here in North America, right? Most companies now have, I'd say in Singapore, have 1 day a week you can work from home, and it could be a Friday, could be a Monday, and if you have a big team, maybe half is 1 week, half is the other. But definitely people are back in the offices the majority of the week now, and it's important both for the local. Mentioned earlier, the local business, the restaurants, the shops, the cleaners, everyone that relies on them. but also really, the values of commercial property, commercial real estate, right, which are owned by your pension funds that so that those asset values aren't dropping, for example, which is a challenge that we're having here in Canada, I believe, and the States for that matter. But it's been quite an orderly return to business in Asia, in most countries, I believe.
Yeah, it's to your point, it has been more challenging in North America, definitely in Canada. Like, I've known that there are many businesses who are struggling with trying to figure out the hybrid workforce, where how much time do employees work from home, how often do they come into the office. And again, there are like broader consequences, as you mentioned, to the economy of not just the person, but like how is their lack of presence in the office impacting the broader economy around them. And besides that, I feel there's also a talent issue as well, and promotion. Like, I've spoken about this before, but like I've spoken with executives, and they'll tell me that they do find it difficult to promote someone that they don't know. Like, how do you assess someone's skill sets if they're not there? It's a lot more difficult to do online versus in person. And so when you're thinking about the next generation and the leadership that's going to come out of it, it's sort of like, well, like who do you go to? How do you assess someone appropriately? I'm sure there will be some new tools or some new innovative ways that are introduced in the future, some other methodologies. But for now, that is a challenge that's present. Sure.
Where are they going to learn their people skills if they're not around people? Yes, it is a challenge, I think. And how you monitor, how you measure productivity, how there's a lot of nuances in people's behavior. If you're managing a team, if you don't have that personal interaction, it's really difficult to figure out. And then, as you said, assess people for promotion or whatever the metrics might be. But it is a challenge. Yep.
Yeah. And, I also feel it's just good for people to be around other people. Socialization is important. And I feel that's something that was a bit lost during the COVID era, which is unfortunate. But we're getting back to it. People are getting back out now. So that's been a positive impact. Now, you did mention private equity earlier. And so that brings me to Islemount, which is your firm. Yep. Can you speak about Islemount?
Sure.
What you do?
So I work. I guess I wear a couple of hats. I sit on Islemount is my company, and we pull together teams of different professionals depending on what the project might be in a certain geography or a certain industry. A number of colleagues that are either independent or been in the region for a long time, and have other small teams. So we're not quite like a collective, so to speak, but we do come together, or share and originate deal flow, and work together on the projects that we decide fit our skill sets or metrics that we work for. I also sit on the board of a Thai-based private equity group that's in their seventh vintage. They invest in Thailand and Vietnam and the greater Mekong area, in general consumer private equity types of businesses, consumer facing mostly. They're on their sixth vintage, so they've been around for a while. I also help out, and that's a group called Lombard Private Equity. I sit on the board of a Singapore structure for a company called CG Wellington, based here in Ontario, which is an investment and operating platform in the dairy sector. They invest in and sell, manufacture dairy equipment, dairy nutrition, and dairy chemicals, whatnot. And they have a project in the Philippines and also Cambodia that we're working on. On the other front, with my almond hat, we're doing a couple of financial services transactions. One for a global payments company, and one for a digital private credit a group out of Singapore that's MAS regulated, that provides wholesale financing on one hand to companies that lend to the last mile customer in their geographies, such as consumer finance, leasing, and their capital comes from largely small family offices, high net individuals who want some exposure to private credit and get the returns that come from that. Those are a couple of things that I work on I'm working on at the moment.
Yeah, that's a lot. I'm not sure how you. You most likely. Not most likely. You definitely have very good time management skills in order. If you're working on all of those, ensuring everything gets done appropriately for all those different projects. We were speaking about COVID right before this, so I'm curious, how did COVID impact financing and just different deal originations in Asia?
Sure. Look, it definitely slowed things down greatly. I think if you had pre-existing relationships with clients or investors, then I think things were able to progress to some degree. But if it was a new relationship, going back to your comment about meeting face-to-face and getting to know you, it was very difficult. You couldn't fly to other places to meet people. And if you could fly, people were not working in the office. So, if you flew to New York where you could have 6-7 meetings a day, you could maybe have 1 or 2 because you had to go out to the suburbs to meet the people, a coffee shop near their house, and come back because they were in the office. So it made things very difficult, definitely. But as you mentioned earlier, I think that started to shift to get back to a more normalized pattern of behavior. But there's a certain ebb and flow in private equity where, many firms, if you were an investor, you could schedule roughly when firms were going to come back to you for their next vintage, right? And that all sort of stopped. So if you were expecting, a couple of thousand funds to come see you across different asset classes in, this year because the timing of their funds were ending, you probably have 3 or 4 times that because the previous years, when people's funds were ending and they would be getting on the trail to raise their next fund, all got jammed up. And so that hasn't worked its way through the system. And the size of the teams on the LP side is still the same, right? So there's bandwidth issues in people processing all of this work that's coming to them. And that's going to take a couple of years or more to work its way through the system.
Right. But I imagine there was also some innovation during that time because people had to figure ways to get around the challenges that they were experiencing. And that's one of the things that I'm constantly amazed by, I suppose, by humanity, and why I also think it's good that we're tested every once in a while, because there's all this energy that comes out and all this innovation that occurs.
To a point, but I think when you're doing when you have fiduciary requirements, legal requirements on diligence items, you can't do that over a Teams call necessarily. So you often do need to visit and have a face-to-face and a touch and feel on an investment or just a check of a physical meeting. So you can innovate up to a point, and certainly you have with things like data rooms and set up for due diligence exercises. But I think at the end of the day, unless it's a pre-existing relationship, which in case people know the principles on either side, and it's a matter of sort of rolling over something that's already existing, a little bit easier. But for new relationships, I think you can still make it efficient through use of technology, but at the end, personal interaction is required. It's quite a personal business, actually. It doesn't seem like it, but it is.
Right. Well, that's similar to wealth management as well. It's a very personal business. And so COVID definitely shook things up, but it did allow for some positive changes. Like, for instance, we saw a rise in e-signatures, which was something that the industry was struggling with for a very long time. So I thought that was interesting. But speaking about risk, given the work that you do with these various different organizations, and the fact that it is in a larger geography, across Asia, how do you assess risk and how do you try to mitigate some of it?
Well, there's different strategies depending on the type of investment that you're doing, but certainly if you're investing into emerging markets, and not everybody does, you need to accept that there's a different set of risks and return than in other more developed markets. Some people address that by requiring a higher return threshold, ultimately, or targeting. If you were targeting in North America a 12% return, you need an 18% return to do something in Indonesia or Philippines or wherever, right? There are ways of mitigating it, finding the right potential partner maybe to go into the market with, even though you could potentially do a certain investment all by yourself. There's no restriction, let's say, by foreign ownership, which there are in some areas in some countries. But I would have, rather than doing it all by yourself, it would be advisable to get a strong local partner that can help you with navigating the politics of the local country. And in all of these countries, there are very good companies and people to work with. It depends on the strategy of the type of company that you're investing in. If you're investing in a company that's exporting, for example, and so producing in local currency, exporting and receiving, U.S. dollars, that's a way to mitigate FX risk of the country that you're investing into, as one example. But there's the biggest thing though is just doing your homework on, which is standard to anyone at the company and the people involved in the markets, and taking a view on whether it's something that you want to do and the risk reward makes sense.
Right. So I suppose just it comes down to premium for the most part, like how you try to compensate for the additional risk that you're willing to take on with different geographies.
Sure, that's one strategy, and certainly if you're a global investor, you are looking at comparative returns in different markets, and do you actually take that risk, or do you have to ask for, say, an additional premium, to borrow your word, in order to go and do that? Sometimes it means that you're pricing yourself out of those markets. But there are investors who do want a broader exposure in their portfolio based on geography, for example, and industries within those geography, and they're looking for an overall blended return at the end, right? So they might get a certain return in Europe or North America and a different one in Asia, but they want to have that diversification in their investment portfolios based on their theses. So they may not require that premium, but again, you can look at a premium. You could look at industries that earn, as I said, foreign currency, for example. You could look at, there are some jurisdictions that maybe you don't want to be in based on, how legal recourse, inflation, market growth, demographics. But you have to do your homework on all of these and pick your targets and pick your regions that you're comfortable with and the industries within them.
Right. And there's a lot of firms out there that do research, of course, that you can subscribe to. And you have a lot of experience with that because that was what you started off with in Hong Kong. So that's fascinating. And also a very good resource. And of course, every area has its own risk. What I find interesting when we speak about this, and you mentioned it earlier, was like regulatory environments in different regions. And that's very familiar to people in North America because, especially within the financial services arena, it seems like there's new regulatory changes coming down the pipeline constantly when it comes to compliance and risk. And so how do you try to manage all of it? As I'm sure you're aware, in Canada, we've finally had the amalgamation between IROC and MFDA, which was a long time coming. But now it feels in some aspects as if we're sort of in a limbo trying to figure out what's actually going to come down the pipeline, like what kind of things are going to get announced, what's going to be allowed, what's not. And, for the regulators, this is, of course, a large undertaking as well. And so they're trying to make sure they do it correctly. And so they aren't making any hasty announcements, of course, but everyone else is sort of wondering, okay, how are we going to navigate this? Because we have these two different bodies, and in some regards, I suppose MFDA was given other like special allowances that the IROC firms were not. And so how much of that will be brought in, who will get what. And so based on your experience in Asia with all these different geographies, like how do you navigate regulatory environments?
Well, I would say certainly in Singapore and Hong Kong as well, depending on what you're doing. And I work in private spaces, not public markets, generally speaking. The regulatory structures are quite straightforward and they're quite simple. And you know, there's more setting up a company is very quick. For example, knowing which territory to use. For example, in Singapore, you have tax treaties with most of the jurisdictions in Asia. So instead of investing from your Cayman's fund vehicle directly, or that, you would set up an SPV to then hold that investment. So you're mitigating your tax risk, for example. But I get the sense that that the environments that I work in Asia, in Singapore in particular, are are very well regulated, but not over-regulated, and the rules are pretty straightforward. There are mechanisms for the regulatory authorities to make changes, and they do, but they're well publicized. Certainly, amount of industry consultation that goes on as well. But right now, I think the big things in my neck of the woods are looking at things like sustainability and ESG rules and how it affects a broader set of regulatory writing and making issues around governance and that a priority for folks. So there you do, if you're investing in a certain country, and you do need to check in some cases on things like what the industry is, because sometimes there are foreign ownership restrictions. You do need to check on instruments that you may use, because some countries say rules around convertible bonds or convertible notes are different, may not be technically allowed in some cases. Issues on paid up capital for a company. In some cases, you do actually have to put all that capital up into the business. In some cases, you don't, so that affects how your cash flow works. In some cases, you need to get permissions to repatriate profits or move money around, and you need to check that. So it's great, you can invest somewhere, and that's a successful business. But if you can't take your money back, that's a bit of an issue, right? So all these things you do need to check. And if you're in a regulated industry like power, for example, you do need to understand the relationship between government and the utility and how prices are determined. Sometimes it's at a political level, sometimes the utility does it. So there's a lot of nuances that you need to know of each sort of country and market that you're investing in. But I don't know, maybe I've been there for a long time, so it doesn't seem so daunting. But it's probably no different than being in North America, and particularly America and Canada, where regulations are often set on a province or by province or state by state level, and you need to understand the nuances of those. And there's just as many interprovincial trade barriers or interstate trade barriers, depending on what business you're in. Collection of taxes, for example, too, that you need to understand, so you stay on the right side of things.
Right. Yes, it's interesting. There's just so many complexities, and sometimes I do wonder if things are just too complicated, and they really should try to simplify some of these regulatory regimes. Because again, having state and like provincial and federal laws for the exact same thing doesn't make much sense to me. But that's just me. I'm sure there's higher powers out there with more knowledge for why they do things the way that they do. Now you mentioned ESG. How prominent is ESG in Asia?
It's very prominent, as it is everywhere else. So I mean, if you're making and it's being driven by some of the investors into funds, for example, if you're dealing with an American or Canadian LP, as part of their diligence, they will ask about your ESG policies, and they will have a checklist based on sort of global standards that they expect companies to follow to some degree. And you, as a, and I'm talking about, private equity funds and that, and you do generally have some reporting on that, but I think in all the jurisdictions in ASEAN, much like in the West, they've made commitments to certain things like decarbonizing and the environment and whatnot, and those are tracked and looked at.
Yeah, so ESG truly is global, which is great because we do need to protect our environment. Now, I don't usually like to get into politics, but I feel that there are, of course, always real life consequences to politics. Mm-hmm. And so without getting too deep into anything, you mentioned Asia and the regimes there and the regulatory and the taxation policies, but it seems like there's some tension between the West and the East. And so how do you contend with that? Like, what's your view of it? What do you think will happen? How can it be solved?
Well, I think there are some tensions, but mainly around China and America. I mean, that's and other countries, have to navigate that. ASEAN obviously is a very connected partner to China with supply chains and investment flows, but similarly, they're very well connected to the U.S., which is a big destination of a lot of the goods that are manufactured, and it can be challenging at times. And I think that the best way to navigate that is for like-minded countries, small powers like the ASEAN countries and like Canada, to maintain and strengthen their relationships, particularly around rules-based trade and the way that the system works, and then we'll together have more influence on navigating some of these tricky issues. The Canadian government has last year announced their Indo-Pacific policy, which is a whole of government policy that really shifts looking towards the Asia Pacific as a key source of business going and diversification going into the future. Obviously, there's a component that around China, a component around India, and then the bit in the middle, the ASEAN component, is really at the core of this thrust and policy thrust. And I think the good thing about the two major political parties in Canada is that the strong belief in trade remains at the core of both. There's no disagreement on that subject. I mean, priorities might vary, tactics might vary, but at heart, Canada is a trading country, and for the region that I work in, everybody's on the same page. So, and that's great to see, and I think that's why we're having the progress that we're having in the region. That without a question, we need to be diversifying our trade, strengthening our trade ties, and it's being reciprocated by the ASEAN nation, looking at Canada as a longer-term stable trading partner, particularly for energy and food. Energy security, food security are two issues that have come up tremendously since COVID, because there were dislocations in both of those areas given COVID, the war in Ukraine, Middle East. And I think countries are, from a trade point of view, are assessing who they want to partner with and who do they want to, who can they depend on, right? And I think Canada is a very dependable nation in terms of things like energy and food. We don't weaponize them in terms of using them as trade dispute mechanisms. And a lot of the Asian countries would like to shift some of their arrangements towards Canada and avoid some of the, where they get some of the inputs from other parts of the world where it's, less stable. There's conflict going on, and we could play a really key role in that in the region as a nation and as a business.
Yeah, it sounds like an incredible opportunity for Canada. For sure. And yeah, we have always been more of a peacekeeper, which is something that I'm very happy about. And I'm glad that we don't try to or attempt to weaponize things like food, because that would be a terrible thing to do.